Good morning. This is Vance Williams out of Seattle, Washington, here in the United States. Welcome to my morning Forex trading show. It's Thursday, August 7th. This morning, as I focus on reading price and what it's doing, I'll talk about how I'm doing it, and which is a technique I call price logic trading. Victor's out today. We'll miss you, Victor, but we'll see you back next week. If you're coming from YouTube or Google, and you saw my video and you want to get 8 things, let me bring that up for you real quick here. Let's see, here we go. Go to forexartofwar.com. Oh, looks like our programmers are busy working on the page here. It's on the right side here, this little box here. Just put in your first name and your email. It looks like you might still be able to do it. I don't know, maybe hit enter. Anyway, we'll get that fixed this morning. But remember, forexartofwar.com, and then click there on the right. Okay. So coming back here with me, so let's get to what's happening with price right now. Please understand that what I share with you is for your educational purposes only. Okay, keep that in mind. All right, let's go to the charts. All right, looks like the pound's making a little bit of a move to the bottom here. Now, I haven't done any analysis this morning, so you guys are going to kind of see exactly what I do. Price logic trading. Sometimes people wonder if I just come up with cute names for my thing, like Forex Art of War. That has a specific name because I use the principles that I learned as a student of the Art of War to create the strategy for you learning to do this. So it really is just grown right out of the core. Price logic trading is the same thing in that it's descriptive of what I'm actually doing. Logic itself, whether you're using complex algorithms or your MIT degree in applied math, it really all comes down to human behavior. So when you think logic, you should be thinking human behavior. And so in effect, what I'm doing is, explained in real simple terms, is I'm observing the logic, I'm observing the human behavior that's telling me on all fronts what's likely to happen. So what's the logic that tells us which way price is likely to go? What is the repetitive human behavior that's telling us how strong the move is? What is the repetitive behavior that tells us where our best location for our stop loss should be? What's the most repetitive human behavior that tells us where the best target is, the highest probability? So there's something that happens over and over again, but you have to know all of these parts. What are the market conditions right now? I haven't actually looked in the last few minutes, but there might be some high impact economic data that just came out. I know there's some for the euro and the dollar. Actually, I just remembered. But does that affect our probability of winning? Absolutely it does. Which data is it? What does that data usually do? What is that data doing now? And how do people behave as a result of that information? So this is all about, price logic trading is about being able to read all the repetitive human behavior and use that as your information for making decisions. And a really important tenet of price logic trading is that you need to make sure you're taking into consideration all of the elements that you can that affect your probability of winning. So I've put a key level here. One of the things that I've noticed over and over and over again is when these 30-minute candles close, they tend to tell a tale of where the dividing line is between the buyer and seller struggle. And sometimes that line will move just a little bit like it just did, but we're right there. So it did close a little bit below that, but I'm going to adjust it down. So this literally becomes an important price here. So essentially price is in a range right now. It's just stuck in this range of about 30, 40 pips. And we need to come down through here and stretch out in order to create an advantage for the sellers that's strong enough that we go, okay, you know what, they're really taking these guys out over here. So as they do that, then our next question will be, well, is the range big enough to get in and out with good risk management. In other words, do we have enough room to put a stop? We don't want to stop 4 pips away from price. It's got to be a little bit bigger, give us room. This is looking kind of bearish right now. Let's drop down to the 5-minute, just take a quick look. This is the pound dollar. That was a 30-minute chart. I'm dropping to a 5. You can see it's just kind of bouncing off that level right now. So this is the line of contention right here, 168.26. This is where you've got quite a bit of buyers, quite a bit of sellers right in the location. So it keeps going up and down. Now the sellers, it looks to me like there's a little bit more sellers in the market right now. But you see the buyers come back right there? So this is the line. So the sellers have got to push it through there. And I am noting that if I go back to the 30-minute here, I am noticing that there are probably some buy orders sitting right down in this area. So the sellers are going to have to get through that as well. So that's what I would be watching there on the pound. We've had a bit of a reset in terms of the trend. So this trend was down. This trend kind of started to go up and thinking about going down, but it's really just stuck in this range. So a real trend begins if we get established outside of here. Top side doesn't seem much point in talking about that at the moment. Okay, so let's go over to our other main pair. Just like there's a logic to which way price is likely to go, which, by the way, if the overall volume is down, price movement is down, it's more likely to move down. And I can go into a lot more specifics on that in other shows. But let's pop over. I got a little frog in my throat, it looks like. But let's go over to the euro and see what's happening. It looks like I know we had some high impact data come out at 8:30 from the eurozone. We've had quite a bit this morning, and I believe it was a press conference from the European Central Bank. And so that's creating some hyper volatility here and speculation. You can see it slowed down. The euro dollar is a little bit more of a conservative currency pair because the euro and dollar are reserve currencies. But what I was going to tell you is just like there's a logic to price direction, there's also a logic to currency pairs. The euro, write this down, the euro, the pound, and the dollar are 70% of all the money in Forex trading. So if you're trading like the Australian dollar versus the US dollar, you're trading 40% of the liquidity against maybe 3 or 4%. So it gives you some perspective there. But I tend to stick with the euro dollar and pound dollar because the behavior is much more consistent, and that means your probability of winning is higher. And then, of course, from there, you build in on the individual nuances of the currency pair. All right, so right now we've got you can see if we just zoom in on those moving averages, which we just use loosely to give us an idea of is the money down or is the money up. Ultimately, we're not going to trade the moving averages unless they're crossed down for a sell and advancing the trend. And in that context, regardless of what anybody tells you, they're 100% accurate. If you use them by themselves, they're not. And notice also this gives me the opportunity to show you that the moving averages actually, they were crossed a moment ago, and as price pushes up, they're uncrossing. So they'll have to cross, and then the 30-minute candle will have to close in order to confirm a cross. But otherwise, they can just stretch right apart and continue up. So with the euro dollar right here at this moment, part of the logic is, okay, we're in the middle of high impact data. There's a great deal of speculation going on right now. You can see this struggle. This is like getting between two people in a bar fight. That's exactly what it is. You want to get in the middle of this. What we want to do is we want to see price probably break. I'm not going to put the rectangle on there, but I'll say right above that level, 133.89. So that'll create a pretty good advantage for the buyers. We actually probably drop that down to 88, but I'll leave it right in that area. All right, so look for the euro to make that move above there and stretch out. To the bottom side, it's a little bit farther away. I mean, first of all, even if you try to trade down to here, you'd eventually run into this mess here. How big is that range? That range is about 42. The euro lately, it likes to make moves of about 50 pips. Here's 57 pips from the bottom. It's pulled back. It's got a little confusion. It's corrected. It's consolidated. It's ready. If it does break above 133.90, once you guys watch and see if we don't see price move about 50 pips to 134.13. Likewise, if it moves back down here, look for it to move down about 50 pips down and test this bottom. Australian dollar, let's go to that 30 minutes. That's had actually quite a decent move down. I think yesterday there was employment data that came out for the Australian dollar. I don't recall right now. You can look on the side under high impact data. But this is a pretty steady movement. Let's drop down to the 5 and see what that looked like. Yeah, it's right there. Some pretty fast movement. I like to look and see how big it was. 46 pips in 10 minutes. That's pretty big for the Australian dollar. I would say this morning that if you're looking at potentially trading that, and we'll go from here to see how this pulls down and retraces right here. Somebody's going to take me to task on that. Let me double check. It comes really close. Anyway, I'm gonna say. I mean, you could do it either way. You could go from here. So that's 96 pips. You know, one of the things with price logic is, you know, if you see a move that you're trading that's 96 pips, the first thing that should pop into your mind is, that's unusual. It is unusual. This does not happen every day. It does not happen every week. An intraday move of 96 pips without a pullback is not usual. And so again, think about those words, repetitive human behavior. That's the core of logic. What is unusual? Unusual means that it's not repetitive behavior, right? So if you're practicing, by all means, you know, take a shot at this, at a pullback in this area. Even if you're a little bit more advanced trader, what I would do though is watch to make sure that you know, during the U.S. session in particular, that you're moving in the same direction that the dollar is moving against the euro and the pound. That doesn't hold true, of course, because the Australian dollar and the Kiwi, the New Zealand U.S. dollar, they do their own thing. They have their own behavior. They move. They dance to the beat of a different drummer. I mean, they're affected by commodities heavily. They're affected by decisions out of China that have nothing to do with what you and I have learned to do in currency trading. So you can trade them, but you got to know that there are nuances associated with different currency pairs that if you're going to be successful, you have to learn those nuances. Take a quick look at the Kiwi. It's kind of sideways right now, so I'll pop a couple of key levels on for you. There's one right there, and here's one right here. So this works either way. If it moves above 84.83 or below 84.53, you potentially got to trade if it stretches out big enough to get in and out with good risk management. Now, some people ask regularly, you know, what do you mean big enough? Well, first of all, the range of noise in Forex is, you know, under 20 pips. Pretty much anything can move the market 5 or 6 pips. So you want to stay out of that range of just normal fluctuations of price with banks doing transactions that have nothing to do with speculation about future price. And so you want to have a range of at least 20 pips. And then, you know, in terms of your target, your stop, and your entry, your stop loss, you probably don't want any smaller than 8 pips. And if you're in the United States trading a real count with let's say 50 to 1 leverage, which you're limited to in the U.S. On a currency like the pound, for example, at 8 pips in your stop loss, you're trading so many contracts that you'll run out of usable margin. So that's pretty much the limit of that pair anyway. You definitely don't want to get into a situation where you get a 4 pip stop and a 5 pip target. You don't want to do that. So you know, practice and you'll start to get a feel for what I mean. Let's see, anything else? No, let's just go back to the pound. It's just really holding at that level, that 68.26 level, and the euro's starting to look like it wants to go up. So it looks like the news being interpreted is right now being interpreted as positive. So probably look for that move of above 33.90, 3400 on the euro, and on the pound. Need this to either turn around and cross or move below here. Now, if it does cross and move up, you're going to need to get, let's say for example, this moves up here without a pullback of let's say 21, 22 pips. As long as it doesn't hit this area around 168.85, as long as it doesn't hit that first, you'll have a high probability trade to that level. But if it hits the price and then pulls back, you're going to have increased risk because it's already been there, and we know there's sell orders sitting in that area, so it's going to increase your risk. If it's coming in really strong to it, you're still going to run into sell orders, so look for a better price of entry. So now I want to talk just a moment on the currency revolution. There is a real currency revolution. We could probably call it, at the very least, a companion monetary system emerging in the marketplace today with digital currencies. I have a tremendous amount of information to share with you guys on that. We are literally on the front end. I got to tell you, I found myself telling a friend the other day, I'm a currency trader on the front end, literally on the day while people are just for the first time going west, back in the 1800s. I sell wagons, and the people are going west in wagons. I mean, that's what I feel like. This is so huge. So if you guys learn these skills now, the opportunity that you're going to have in the coming years, I believe, is going to be extraordinary. And on the subsequent shows, I'll be talking about all kinds of different things. But I want to thank everyone for taking a few moments to be here with us this morning. I hope you got just at least one idea that will help you with your trading. I want to also congratulate everyone on our trading team. You guys are doing a great job. To our guests, thank you for joining us today. To all of our members, I'll see you in our live trading room coming up in about 40 minutes with the New York Stock Exchange open, and we'll follow the market together. If you're interested in learning more about being a member in our training program, just write to me, Vance at forexartofwar.com. I've been around for 10 years here. I'm easy to find. It's easy to get an email to me. So just let me know if you'd like to talk. I do free consultations. So you guys have a great one. Cheers, everyone.